Thank God it's Friday. It's the last edition for the week. Welcome to Business Morning. I'm Ini John Mekwa. Well, we'll go straight up to updates from the world of business, starting from the global scene. Oil prices fell today, but we're on track to post solid gains for the week, with demand growing faster than supply, while vaccinations dampen the impact of a resurgence in coronavirus cases worldwide. Brent crude futures fell 40 cents to $75.65 a barrel, following a 1.75% jump yesterday. U.S. West Texas Intermediate crude futures fell 38 cents to $73.24 a barrel, whittling down a 1.7% rise from Thursday. Both benchmark contracts were headed for gains of around 2% for the week, buoyed by indications of tight crude supplies and strong demand in the United States. U.S. crude and gasoline inventories fell sharply in the latest week, with the crude stocks at the Cushing at their lowest since January 2020, reflecting strong demand growth. And back here in Nigeria, the central bank says it will commence immediate refund of the 35 million naira minimum capital deposit to pending applicants of bureau de change licenses. In a statement released, the financial markets regulator also mentioned that it will refund the licensing fees for the applications, as it will no longer process or issue new licenses for BDC operations in the country. The move comes 2 days after the CBN governor, Godwin Emefiele, announced the decision of the Monetary Policy Committee to discontinue dollar sales to BDCs after they contravened the country's forex regulations. Meanwhile, the CBN has directed all deposit money banks to stop accepting instructions from customers to transfer the capital deposit to its designated account for BDC licenses applications. Also, the Association of Bureau de Change Operators of Nigeria says BDCs are still providing foreign exchange services. The president of the association, Aminu Gwadabe, who gave this assurance, explained that the recent pronouncement by the CBN does not stop BDCs from providing forex services as allowed by their operating licenses and guidelines. He clarified that while the dollar sale from the CBN had helped in enhancing supply, the fact remains that BDCs are empowered to source for FX from other sources and also provide various services to members of the public. The AMCON president has called for a zonal nationwide meeting of its members to discuss the action of the CBN and obtain contribution from the national BDC policy. Well, still in the banking area now, First Bank of Nigeria Limited has held its annual Spark initiative, and this year it's focusing on inspiring kindness in the education sector as part of their 2021 Corporate Responsibility and Sustainability Week. The Chief Executive Officer of First Bank, Mr. Adeshola Adidotan, said that at a virtual event that acts of kindness are important in making economic changes, especially in times like this. The event, which attracted speakers from around the world, is to celebrate First Bank's 127th anniversary in Nigeria.
Nigeria's oldest financial institution, First Bank of Nigeria Limited, is celebrating its 127th anniversary. And what better way to do that than with the Spark initiative? SPARK is an acronym for Start Promoting Acts of Random Kindness, which is aimed at reawakening the spirit of kindness, a virtue socioeconomic circumstances have forced many to neglect. This year, First Bank has chosen to show kindness to the education sector.
Let us have an objective of working with other stakeholders to migrate about 1 million students to virtual learning platform. And in this regard, our partnership with Lagos State, our partnership with IBM, our partnership with Microsoft, and other organizations speaks volume.
The Lagos State government agrees the education sector deserves some love.
You don't know what you have done. We gave the devices on which we had uploaded our curriculum, schemes of work, teachers, lectures, drawings, also illustrations, also to children who would ordinarily never have access to such.
Beyond the educational institutions, other speakers believe it is imperative to pay attention to other areas of business.
It sometimes feels as if the whole world has lost its purpose. In fact, the world's in quite a dangerous place at the minute. Not just the pandemic, though the pandemic has really caused all of us to be challenged, but also the climate change crisis we're in, the economic downturn caused by the pandemic, the conflicts across the world, there's a real sense that we are losing values. We're losing our morality. We're losing what gives us purpose.
It leads me to the question whether what we have had so far is not an idealistic version, an aspiration, so to speak. But we need to come back to where we are, right? And how do we make the conversation realistic? How do we, is selfishness not the reality we encounter on an everyday basis? So that kindness here then becomes a way of swimming against the tide.
Since it was established in 1894, First Bank has consistently built relationships with customers, focusing on the fundamentals of excellent corporate governance, a strong sense of social responsibility that keeps impacting society.
And reports released by the National Bureau of Statistics indicates that capital importation into the country declined by 54% quarter on quarter to $875.62 million in the second quarter of this year, compared to $1.91 billion recorded in the first quarter of this year. The largest amount of capital importation by type was received through portfolio investment at $551.35 million, representing 63% of total capital importation during the period. Now, what does this mean for various sectors of the economy? Combined with the recent decision of the Central Bank on the Bureau de Change, we have Tajuddin Ibrahim, Head of Research and Strategy at Chapel Hill Denham, joining us to share his thoughts. Good morning, Mr. Ibrahim. Thank you so much for joining us.
Good morning. Thank you very much for having me.
Yeah. So 54% decline is a lot for one quarter. How did we get here?
Well, the 54% is materially high, just like you said. But I think what we should bear in mind is that we have seasonally lower second quarter capital importation, and this is consistent with what we have seen in the past 4 years. Since 2018, we have consistently seen the Q2 capital importation being lower than the corresponding period of Q1 of each of those years in 2018, 2019, 2020, and of course in 2021. So that looks to me like seasonality. And secondly, I think it is also a reflection of investors from all over the world accelerating their investment into Nigeria in the first quarter of every year, just so that they are starting on a strong note in the country. And by the second quarter, I strongly believe that they consider other regions, they consider other emerging and frontier markets where they take their investments to, just so that the other countries could also benefit. But it is consistent that we will always have lower Q2 numbers compared to the first quarter of the year. And I think we have not done badly in that context. So over the next 1 to 2 quarters, the expectation is that that number should rebound as investors globally consider Nigeria again in the third quarter and also in the fourth quarter of the year.
Isn't it possible as a country for us to have all year round, high investment? I mean, like you said, okay, so they want to start the year on a strong note, and then by second quarter, isn't it possible? Is there nothing we can do, like intentionally, to attract them all year round or all quarter round?
It is possible, and I think it is a reflection of what they will expect us to put in place in the country, and it is largely speaking investing in infrastructure. Global investors, take countries that have good infrastructure in place, they take them more seriously, and they see them as a more attractive investment destinations, particularly from a foreign direct investment standpoint. As we speak, 63% of the inflows that we saw in the second quarter went to portfolio investment, which is not what the country really needs to boost its economy. What we need is more of foreign direct investment, and you will not see much of that if you don't have stable power supply. You wouldn't see much of that if there are excessively high risks in terms of security. You wouldn't see much of that if we have a case where the business environment is not as predictable as it should be. You wouldn't see much of foreign direct investment if you have, low level of, FX liquidity in your economy, and you have a case where foreign investors are concerned about the policies around foreign currency. So we need to put in place all these factors for us to enjoy stable increase in capital importation all through the quarters. So my view is that foreign investors consider some of these elements, and they take countries where these factors are in place. They take them more seriously as good investment destinations for them. Up until when we fix all these issues, it is uncertain that we will see sustained increase on a quarter-on-quarter basis in capital importation into Nigeria, in my view.
Okay, so from the data also, we see that capital importation by sector was dominated by banking, and Stanbic did, very well in that. What lessons can we learn from the banking sector?
Well, I think one key lesson that we can learn from the banking sector, number one, to my mind, is that it is one sector where we can accelerate investment into the Nigerian economy, because that is one sector where we expect much growth, and also a sector where we expect a lot of innovation. When we talk about electronic banking, for instance, we expect a lot of innovation to spring up in that sector. When we talk about mobile banking, we expect a lot of innovation to spring up also in that sector. And this is also consistent with the planned digital currency of that the CBN is working on. So all those are innovative, and they are factors that could accelerate the inflows of capital into the banking sector. And the other sectors, such as the cement sector and also agri sector, could learn from this to put in place policies, to put in place factors that will encourage foreign investors into those sectors. That's one. Two is that the banking sector is one sector where credit flows into the economy. So I'm not surprised that we are seeing the sector as being the largest. And for Stanbic as a parent company, Standard Bank, sitting in South Africa, so it is relatively easy for them to attract foreign investment into the country in that regard. And if you take a look at the data again, you will see that Stanbic IB60, Standard Chartered Bank Nigeria, and also Citibank Nigeria are the top three banks in terms of capital importation into the country in the third quarter. It largely speaks to their parent companies in the under part of the world, and we'll probably continue to see that trend plays out over the medium to long term, in my view.
Wow. So we shouldn't take much of the glory then, because their parent company obviously have some influence, in seeing them shine through that the data there. But anyway,
Absolutely.
yeah. So foreign investors' confidence we also saw in the Nigerian equities market also wane in this period. Well, should we say there's also a bright side to it? Is this an opportunity for the domestic investors to, seize this opportunity and get into the equities market, or should we be worried?
Absolutely, there's a bright side, and the bright side is what you have spotted. It is an opportunity for local investors to consider investing in equities. Nigeria is one of the markets in the entire world where you have local pension investors having as low as like 7 to 8% of their assets under management in stocks. In the US, we have as high as like 23 to 25% of the pension money invested in equities. The same thing applies to other advanced economies such as the UK and also in Canada. We have other, even frontier and emerging markets where we have high numbers in terms of percentage contribution of equities to their asset under management for the pension fund administrators. So in my view, I think the current trend in the market is an opportunity for local investors, particularly the pension managers to expose, to increase their exposures to equities because of the future gains that will accrue on the back of that. At some point, Nigeria is going to fix its FX problem. By the time that is fixed, you will see more inflows of foreign investors into this economy, into this market. And when they come, they will be buying from those that are bought at very cheap prices when prices are relatively cheap as we speak. So it is a huge opportunity for both the pension fund administrators and for also the insurance industry and also for other money managers locally to consider increasing their exposures to equities. Number one, we are seeing strong numbers coming out from the companies listed. Number two, we have relatively attractive valuations, and the economy is on a gradual recovery mode. So that suggests to me that they should consider increasing their exposure to equities before the foreigners will come back again and invest aggressively in the growth story of Nigeria, in my view.
And I like the way you said that very soon that Nigeria will fix its FX problem. And we hope that day comes really soon. But there's also the talk of uncertainty in repatriating capital and earnings by foreign companies and foreign individuals. And this is another discouraging factor to, why we see our FDI down and all.
Yes, so that is the case. And I think anybody that understands Nigeria, particularly the foreign investors that understand Nigeria, will understand that Nigeria, naturally speaking, would always have a currency crisis like every 4 to 5 years. We were in this situation about 4 or 5 years ago in 2016 when we had a slow economy, when we went into recession, and also we had FX challenges. But after that, those challenges were over us because the CBN responded accordingly, and we began to see improvements in the flow of FX in the market, and foreign investors came back to this market. So this is one of such of the periods where we will be challenged in terms of liquidity in the FX market. And I think, investors, foreign investors will naturally slow down, but they will come back the moment we are able to fix this challenge of liquidity. Don't let us forget that the government has gotten approval, from the National Assembly to raise bonds, Euro bonds, about $6.1 billion in this regard. So that should support the FX reserves and should put the CBN in a stronger position to supply dollar liquidity in the system as required by the market. So within the next 2 to 3 quarters, my feeling is that we are going to solve Nigeria's FX problems, and chances are that in the first quarter at the latest of 2022, we are going to see more foreign investors come into this market. Those that have found it difficult to repatriate their dividends are investing them in the respective stocks. And that is the strategy to adopt. We have seen Nestle Global increase their investment in Nestle Nigeria on the back of that. We have also seen Nigerian, we have seen Heineken International increase its investment in Nigerian breweries because they could not repatriate their dividends. So these are the strategies that they are adopting to solve the problem in the short term. But over the medium to long term, Nigeria is going to bounce back from an FX challenge, in my view.
We certainly look forward to when Nigeria will bounce back from the effects challenge. And I know manufacturers will be very glad when that time really comes to reality. Thank you so much, Mr. Tajuddin Ibrahim, the head research and strategy at Chapel Hill Denham, for sharing your thoughts with us this morning. Enjoy the rest of your day.
Thank you for having me.
So we cannot talk too far away from the CBN's ban on BDCs, and that will form our next conversation after the break. Stay with us. It's Business Morning on Channels Television. You're welcome back. Well, it's no longer news that the central bank has ended the sales of forex to bureau de change operators. One of the reasons includes the notion that the parallel market has become a conduit for illicit forex flows and graft. Consequently, weekly sales of foreign exchange by the CBN will go directly to commercial banks. The CBN Governor, Godwin Emefiele, said this at the MPC, the last MPC meeting. Well, to shed more light on this, we have the immediate past Director General of LCCI, that's Lagos Chamber of Commerce and Industry, sharing his thoughts on some of the impacts we expect to see on this. Good morning, Dr. Yusuf. Thank you so much for joining us.
Good morning. It's a pleasure to be with you.
Thank you. So let's start with, how important are the bureau de change operators in the chain of business operations in the country?
They are very important because of the retail structure of their business. And you know what the Nigerian economy is. The informal economy, for instance, accounts for well over 50% of our GDP. Those in the SME segments account for quite a sizable number of operations in the economy, as high as maybe 70 or 80%. Either in terms of economic activities or in terms of job creation. And these levels of businesses had a lot more interaction with the bureau de change operators. And don't forget, the bureau de change processes are not too cumbersome, they are not rigorous, they are not bureaucratic, they are very quick, prompt, and these are the kind of transactions that the small businesses, those in the retail sector, are comfortable with. Unlike what we have in the banking system, where you have very rigorous documentation, processes, bureaucracy, and all of that. All of those things slow down the momentum of business, the tempo of economic activities. But with the bureau de change operators, things are much faster. And in business, you need speed, you need timeliness, you need all those things, you need promptness. So to that extent, I think the bureau de change operators are very important segments of the Nigerian economy.
So this allegation by the CBN that they've become a conduit for illicit forex flows and graft, how has that affected business? I mean, before now, how has that affected business?
Well, I think first of all, we need to define rules. When it comes to issues of illicit transactions, money laundering, and all of that, of course, the CBN should be concerned, but I think there are statutory institutions that normally should be handling such things, so that we don't saddle with the CBN with things that could become a very big distraction, or perhaps the CBN should not saddle itself with things that would be constituting a major distraction. If there are instances of that, we have the EFCC, we have the law enforcement agencies, these things could be referred to them and they deal with it. But more importantly, what we need to worry about is about the way we manage the foreign exchange market itself. Because there are all sorts of abuses, granted, and I appreciate the concern of the central bank about having to curb these abuses. But what we are seeing is that the CBN, or what generally we are dealing with now, are the symptoms, not the causes of the problem. The major problem we are having in the foreign exchange market is a pricing issue. We have a situation where we have an exchange rate regime that is fixed. It's not that it's only fixed, it is fixed far below what is the equilibrium price in the market. And once you have that, you are dealing with a subsidy management problem. And managing subsidy regime in this environment is a very, very difficult task. Now we have the official window, which is the NAFEX window, which a lot of transactions are to go through. Exchange rate at that window is 410. Exchange rate in the open market, which is the operational exchange rate, is 500 naira to the dollar. So how do you sustain that? That is a major problem, causing a lot of distortions, breeding a lot of rent seekers, a lot of parasites in the system, creating a lot of abuses, and creating a lot of uncertainties in the market. So the problem here is the way we are fixing the exchange rates and degenerating into administrative allocation of foreign exchange. We have gone through this part in the past. It doesn't work. It's not sustainable. So what we need to do is to put policies in place that will eliminate this arbitrage opportunity. There are so many people in the foreign exchange market today on the demand side. They are there because they are rent seekers. They want to take advantage of arbitrage opportunities. They are putting a lot of pressure on the foreign exchange market, on our reserves, just because there is these opportunities for rent. That is where the problem is coming from. So we need to price.
How do you say we take care of that problem, Doctor? How do you think we can take care of that problem, especially these rent seekers that are infiltrating the market? Because, I mean, you're supposed to be licensed before you can work or operate in that market. Now, we have these illegal persons, operating there. How do you suggest we deal with that problem?
The way to do with that problem is to float the naira or ensure a unification of rates, eliminate these multiple rates that you have in the foreign exchange market. I mean, look at the number of licenses you have for BDCs. Even the central bank alluded to that. Look at the number that is even on the waiting list. What are they looking for? They are looking to take advantage of the rent, of the premium. So let us remove that. Once we remove that, we bring some sanity into the system. And the way to remove it is to ensure the unification of rates. On one hand, we want to strengthen the naira. We want to encourage inflows. On the other hand, we have policies that are obstructing inflows. And let me elaborate on that. If you are bringing in foreign exchange as an exporter, you will get the exchange rate of 410 to the dollar. If you are coming in as a foreign direct investment, your dollars will be exchanged at 410 to the dollar. The same thing with embassies, the same thing with oil companies. Is that not discouraging the inflow of foreign investment or foreign inflows? And yet we need the supply of these currencies to come in. So what we are saying is that let us liberalize the market as much as possible. If there are instances of what we call market failures, we can come up with strategies to deal with that. If we liberalize the market, there will be calmness, there will be sanity, and the exchange rate will even appreciate. Because right now, we are driving a lot of businesses underground. A lot of businesses are now taking place outside the country. People will pay naira here, they will get their dollars abroad. That is not the way to run an economy. So these things are creating a whole lot of distortion. And I don't know why the CBN is averse to allow the market system to operate in the foreign exchange market. That is the root of the problem. So if you want to boost supply, let us liberalize the market. Let whoever is bringing the exchange rate have the opportunity of enjoying the prevailing market rate. And with that way, a lot of inflows will come in outside from oil. It will reduce the pressure on the CBN. It will remove all these distractions that the CBN is facing. That is the way I think we should go.
Okay, but now
we are talking all this subsidy problem, all these parasites in the foreign exchange market, all these rent seekers. It's creating a lot of distraction for us, and it's distorting the economy.
So now that the CBN has said its weekly, flow of forex will go directly to the commercial banks, and I mean the CBDs, they have to find a way to get their own supply. That's the BDCs, I beg your pardon. They have to find their own. Now, How do you see the commercial banks managing it? I mean, some people have said if there was abuse before, there's the fear of even greater abuse now since everybody has to go to the commercial banks. How do you see them managing this to avoid that abuse?
You see, for as long as we have this premium, the very problem that we accuse the BDs of will now be translated now to the banks. Those problems will still continue to manifest. Those who are on that desk, they are not angels, they are human beings. And for as long as you have these opportunities, those abuses will still continue. It's like kicking the can down the road. You are kicking the can from the BDCs, you are kicking it to the commercial banks. Those problems will still continue. You still continue to have all these underground deals. Something will be put on the table as the official rate. Something will be paid under the table to make for the premium. That is not the solution. We are still going to have the same problem. So the solution is to allow the market to function. The CBN should stop obstructing the market. If there are needs for intervention, there can be strategies for intervention on the demand side, or more importantly, on the supply side. Otherwise, we continue to run in circles, and these things will continue to create liquidity crisis in the foreign exchange market. So that is the way to bring some calmness into the system.
Do you see the CBN reverse? I mean, this is not the first time they're taking this decision. Do you see them reversing very soon?
Well, I see them reversing if they want to relate to the reality. Because economics is a science, even though it's a social science. It's a science because you can easily predict outcomes. That is what science is all about. If you have this kind of policy, you can predict the outcomes. When you have a huge gap between demand and supply, and you fix your rate far below the equilibrium rate, you are going to have a lot of problems on your hands. How many people do you want to police? We have had similar experience with a fertilizer subsidy. We know what we went through as a country. When trailer loads of fertilizers, even accompanied with military men, were disappearing. We are having the same problem with petrol subsidy. It's still a problem we are contending with up to today. Talking about smuggling of petroleum products outside the country, have we been able to stop it? So on top of that, we are now having this foreign exchange subsidy problem. It's a subsidy management problem. And it's a very, very difficult problem to deal with. So we should stop suppressing the market, because it is like swimming against the tide. If you try to suppress the market, people will find other ways around it. I just told you, a lot of transactions are now taking place outside the banking system here. A lot of transactions are now taking place offshore in various countries. People have their accounts there. They have Naira account here. You pay them Naira here. They do transaction for you abroad. That is not good for the economy. That's not good for liquidity that you want to ease in the foreign exchange market. It's not even good for our reserves, because this problem is putting a lot more pressure on the reserve, which is not a good thing, because we are attracting a lot of spurious demands. We are attracting a lot of speculators into the system. That is not good. So I'm hoping that the CBN and all the economists in the CBN will sit down and look at these things properly and put proper propositions on the table, because this is not sustainable. I can tell you that.
All right. Some people have also said that a more lasting solution will come with dealing with the supply. And unfortunately, like we discussed with our first guest, capital importation is declining, which is where we're actually supposed to be getting, this forex that we're talking about. Because, I mean, if supply is sufficient, then I believe we will not have to take some of these steps that we see.
The problem is that the policy itself is obstructing supply. That is the problem. If you want to bring in FX into this economy today, you are going to be exchanging your FX at 410. When you know that the open market is 500, will you bring the FX? The exporters have been complaining for several years. They bring in the export proceeds, and we say we want to encourage exports, and we are exchanging the export proceeds at 410. I now accuse people that they are not filling NXP form, they are not doing this. It's about the legitimacy of the policy. For you to elicit compliance, policy itself must be legitimate. That is the issue. So if you want to encourage supply, you need to liberalize the rate at which people can bring in their supply. If you are imposing a rate of 410 on the export process, on foreign direct investors, on the embassies, on the oil companies, you are discouraging them from bringing in the foreign exchange into the economy. And you are boosting what we call the underground economy. You drive a lot of businesses underground. That is not healthy for the economy. So that is what we need to do. That is why capital importation is also dwindling, and it's not good for our reputation as a country. Because once we continue to have all this crisis liquidity problem in the foreign exchange market, this has a very negative signaling effect. And part of the reason you are having that is the policy that is obstructing the supply of forex into the economy, and a policy that is encouraging even more demand. It's a contradiction in terms when we relate it to the objective that we seek to achieve. So I'm hoping that this policy will be reversed because it is clearly not sustainable.
Okay, so we know that, accessing FX before now was difficult for manufacturers, a lot of business people with whom you communicate with. Could you tell us their feel? It's just about 3 days since this ban has been put in place. Has it been more difficult? Has it been easier? Is it still the same thing?
Well, a lot of anxiety is in the air. A lot of investors, businesses are jittery. And this is already, reflecting in some prices. People are now already going back to the drawing board to adjust prices because they are reading that, okay, this will have implications for costs. And this is not in any way going to solve the fundamental problems of restoring confidence into the system. It's not going to. So, well, it's still early days maybe, but what I do know is that the problem we are running away from in the BDCs, we'll be replicating those same problems with the banks. If we continue to impose an exchange rate that is not sustainable, that is not realistic, those problems will continue to be there. There's a fundamental issue of pricing, of eliminating subsidies, of eliminating speculators, of eliminating rent seekers, of eliminating parasites in the foreign exchange market. That is what we need to do. Once the confidence returns, a lot of things will begin to happen on the surface, not on the ground. And more monies will continue to come in. So what we are seeing now is a manifestation or symptoms of a defective foreign exchange policy, foreign exchange pricing policy. That is what it is.
So assuming that the central bank decides, like today, to reverse its decision and bring back the BDCs into operation, what other regulation or guidelines would you suggest that the CBD puts in place so it will eliminate most of these things, at least in the short term? I know in the long term we have more work to do to make the space cleaner than it was before.
What we need to do, I think Bismarck also alluded to this on your program. We should stop offering, even to the BDCs, something that is carrying that kind of huge premium. The premium is too much. If you know that the operating exchange rate is about 500, you can create a margin of maybe 10 naira or something, and then take it at 490. 495. Don't create opportunities for those who have no business in the BDCs to now be carrying BDC licenses all over the place. Many people are carrying the licenses not because they are operators of BDCs. They just collect the BDC allocation, sell without even opening any shop. That is not the kind of businesses we want to encourage. So let us eliminate all those margins, and let us reduce the level of regulation. The system is over-regulated. And when you over-regulate a system, you drive a lot of transactions into the informal economy. You drive a lot of transactions under the table. It's not healthy for the system. So let us reduce the regulatory system. Let us reduce the premium. Once we do that, I think some sanity will be restored, and the CBN itself will have some peace. They'll be less distracted. They can focus more on core monetary policy issues, financial stability, price stability. That is the core function. But this is creating a lot of distraction because it's a very, very difficult thing to manage, just as we have seen with many other subsidy regimes. And just as we have seen even in 2016, we had this similar problem until we now brought in the I&E window in 2016. This was the kind of crisis we had. At the moment we brought a window that was a market window, it brought a lot of stability into the system. But today, the NAFEX window is not a market window because the rates here are not market rates. They are fixed rates, which itself is a contradiction. Those are the fundamental issues we need to deal with.
All right. Thank you so much, Dr. Muda Yusuf, the immediate past Director General of Lagos Chamber of Commerce and Industry. Thank you so much for sharing your experience and your helpful thoughts with us this morning. Enjoy your weekend.
Thank you. Thank you very much, Ine. Thank you.
So we'll take a break now. When we come back, we'll head straight to London. Do stay with us. You're welcome back. You're still watching Business Morning on Channels Television. We head to our studio in London now, where Juliana is standing by to bring us up to date with happenings in the UK. Hello, Juliana. Thank God it's Friday.
Thank God it's Friday. Good morning, Innie. Back in the studio.
Yeah, back in the studio. Good to have you back in the studio. Anyways, well, some nightclubs in England have begun requiring NHS COVID pass for entry. And what reactions have been following this decision by some of these nightclubs?
Yeah, the reaction's not great. Currently here in the UK, COVID status certification or vaccination status certification is not mandated by law, but it does appear as if we're heading in that direction because on July the 19th, as soon as all restrictions were lifted, in a televised address to the nation, Prime Minister Boris Johnson made it clear that by the end of September, all nightclub venues and that operate in that capacity will be required to ask their paying customers to verify their vaccination or COVID status. Of course, there's been a huge outcry, but some nightclub venues are going ahead of the government and they're requiring it already. So this story is about the Ultimate Power nightclub. They're going to be having 2 nightclub events, one in Manchester and one in London, and they are asking people online to make sure if they're not double jabbed that they can show that they've had a negative lateral flow test. And this is really about targeting the young age groups, so adults between the ages of 18 to 29. Currently I believe about 40 million adults in the UK have had a COVID vaccination, but that group are lagging behind. I believe about 3 in 10 haven't had one at all and don't have any plans to, which is why some critics are saying some of this legislation is targeted toward them. Nightclubs are one of them. A lot of speculation and rumours are being held about universities. So if you're going to go back to university in September, you must be fully vaccinated. It's a huge issue because this is about civil liberties and rights. A lot of young people are not happy with it. But nightclubs, they've been suffering financially over the past 18 months. They want their money back in the till. So they need to check that the people coming into the venue will be safe.
So 100 was down this morning, but NatWest is reporting profits. How is the market doing at this time?
Yeah, the FTSE is in bad shape. It's 42 points down, very much in negative territory. And not much of the anxiety is domestically focused. They appear to be looking at what's happened overnight. And with that shocking update from Amazon, it's been the week of the Silicon Valley tech giant updates. We've had really positive, strong results from the likes of Tesla, Apple, Alphabet, the parent owner of Google, as well as Microsoft. Amazon, who its founder is the wealthiest man in the world, has given a pretty negative Q2 results. In fact, even on Q3, they've had to downgrade their forecast, and that's because the world is opening up. Lots of people now are going into the bricks and mortar stores. They're not ordering for Amazon. That's kind of spooked the markets because it is obviously one of the world's wealthiest companies. Their shares were down 7% in aftermarket trading. Again, China's regulatory crackdown on its domestic tech titans is still spooking investors too. They are going to be updating their PMI results over the weekend, as well as their job market data. So again, lots of people looking at that, but it does appear that the FTSE All-Share is going to be heading into the weekend in negative territory.
And what should we be looking forward to apart from the PMI over the weekend? This week you had an exciting one. You were at the Global Education Summit. What are we looking forward to next week?
Yeah, next week, back to work. Data. We are going to be getting the final PMI data for July for the private sector. So we'll be having a look at services, manufacturing and construction. We got the flash data earlier in the week, not looking that great. Q2 is off to a bit of a rocky start here in the UK, and we are starting to see those numbers fall. Is consumer confidence sliding back again? That's what the data suggests. However, we did have that positive data from the IMF showing that the UK is on track for a 7% expansion of GDP. Let's see if that's reflected in the numbers. And then on Thursday, it's the all-important Bank of England Monetary Policy Committee meeting. They will decide on Thursday whether interest rates are going to remain at the record low 0.1%. Quantitative easing, will it remain at £895 billion? All of the economists and the observers say it will remain unchanged, but we're not sure. Inflation is skyrocketing high at the moment, and the Bank of England Governor Andrew Bailey has always said he will tighten monetary policy if he does feel that the economy is on the route for a bounce back. So yeah, we're going to have a busy week as always, but we're going to soak in the fact that it's Friday and enjoy our weekend.
Yes. Well, not Friday yet for you because you still have Business and Corporate at 1:30 and you still have Channel Business Global later on tonight. All right. Anyway, so do enjoy the rest of your day, Juliana. So we'll move over to the markets now. Will Ibong, is there a further drop in the oil share index yesterday? Will, what are you doing to this market?
Amy, good morning. I am certainly not doing anything to the equities market. Rather, the equities market is doing something to me.
Okay.
We, like you rightly said, the equities market dipped further into the bear territory following investors' profit-taking activities across sectors. The oil share index declined by 0.79%. That's a huge one to 38,484.82 points when compared to yesterday's loss. This is a huge, the previous day's loss, this is a huge one as 159 billion naira was shaved off the market cap. And we see it barely hanging to the 20 trillion naira mark there. We also see the month-to-date gain moderating further to 1.5%. However, the total volume of trades increased by about 9.5% to 259.96 million units. Value and deals inched higher as well. Sectoral performance was broadly negative. The losses were recorded across the four key sectors, leaving insurance the insurance index as the only gainer. We have Abdulrasheed Momo, a stockbroker at TLW Stockbrokers, to give us more insights. Good morning, Abdulrasheed.
Good morning.
Abdulrasheed, you tell us what's driving the negative sentiment in the market despite the influx of corporate earnings that we're seeing in recent times?
Basically, I always tell people that we have two types of group in the market. We have the investors and we have the traders. So basically, the investors are still much in the market in terms of earnings reports are going to come out. From what we've been seeing. We've been seeing some good earnings report lately. But when it comes to the traders, any spread they see, they virtually take advantage and they take profit off the table. Example was what happened to Owando. You saw how Owando have been doing very well at the beginning of this week. But yesterday we saw profit taken off the table. But generally, overall, the market still looks great. Yesterday's drop has not hindered any. If you check out the week, the market started from a hold on. The market started from about 37,000 points plus and got about 30,000 points. So yesterday's drop about 300 points has actually affected the bull run for the week. So we still expect more upside for the market.
Okay, so while you're at it, what's the outlook? Today is the last trading day of the week and of the
Yeah, the
month of
market
July.
is partially up for now. I think we're about 11. Hold on. The index is about 0.11% now. That we made about 44.12 points so far. It's mixed,
Okay.
but most of the major indexes are in green.
Okay, thank
So
you
the
so
market still looks
much.
good.
Thank you so much for that, Abdurrashid.
Okay, thank you.
That's Abdurrashid, the
Okay.
stockbroker at TLW Stockbrokers. Move on over to the NASD, the OTC market, where the NASD market cap and index traded bearish yesterday, 0.13%, at 753.24 points, and closing at 654.69 billion naira. We are just hoping that the fixed income market, there was an NTB trade yesterday, auction yesterday, and we saw interest rates, yields going low and low, and we're hoping maybe next week we'll get a better insight into what's happening in that space as well. That's it in it for today.
All right, thank you so much, Will. And well, it's good to look forward to the close of trading today. Like Abdurrashid said, the market is up at this time.
Yes.
We do hope it stays up because I have to bring the stock market report later on tonight. I want to have good news to close the week with.
We will have good news.
I do hope so. Well, that's it on Business Morning for the week and for today. Thank you so much for watching. I'm Ini John Mekwa.